And it's great to have you join us on another edition of the only weekend business program on Channels Television Capital Market. I'm Ladi Williams. Let's begin the show now with a quick review of the global stock market's performance at the end of the week. We see major global stock markets ended Friday's trading session mostly lower as investors digested China's inflation and trade data for September and assessed strong U.S. earnings. Stocks were also pressured by a spike in oil prices and rising inflation expectations as Wall Street wraps up a volatile week. In the United States, the S&P 500 declined by 0.50%. The tech-heavy Nasdaq Composite lost 1.23%, while the Dow Jones Industrial Average rose by 0.12% at 39.15 points. In Europe, the German DAX fell by 1.55%. The UK's FTSE 100 dropped 0.53%, while France's CAC index declined by 1.42%. And in the Asia-Pacific, Japan's Nikkei 225 slipped 0.55%. Hong Kong's Hang Seng Index traded 2.45% lower in its final hour of trading, while China's benchmark CSI 300 fell 1.05%, closing at 3,663 points. So some news now. Over the week, we see the private sector needs to rise up to the challenge of sourcing long-term financing from the capital market to fund the provision of infrastructure in the West African sub-region. This coming from the Director General of Securities and Exchange Commission, Mr. Lamido Yuguda, who addressed a pre-event press briefing on the forthcoming West Africa Capital Market Conference, which is set to hold in Lagos on October 25th to 26th. The SEC boss says there's a growing need to adopt innovative financing mechanisms and sustainable financing options to mobilize the desired funds to meet the region's critical infrastructure needs. Take a listen.
Over the past, many years, the SEC has actually been really working with government. We have the annual budget seminar, okay, which we have used really to, encourage and to advise, the government to look to the capital markets to finance, infrastructure projects. You know that we have a very long list of demands that we demand of our government. Okay, we want free education, we want good health care. Okay, we want the government to provide good sanitation. We want government to do a lot of things. For us, there is the issue of security, there's the issue of foreign policy. Okay, infrastructure still needs to be financed. Now, government can use the capital markets to access the funding to finance infrastructure. Government can also use the private sector to enter into public-private partnerships, to really deliver infrastructure projects.
Yeah, so we see the Director General of the Securities and Exchange Commission, Lamido Yuguda, urging private sector players to source long-term financing from the capital market for infrastructure development in the West African sub-region. Well, joining us for this conversation now is Dr. Okeomeno, Chief Economist, Securities and Exchange Commission of Nigeria. Great to have you on the show, sir.
Thank you, Ladi, for having me today.
Right. So, listening to the Director General of the SEC there, what would you say is the discouraging factor here from seeing the private sector and public sector going to the capital market, for long-term, financing? And would you say there's been some kind of improvement, right now?
Thank you, Ladi. There's clearly been some improvement. If you look at the growth of our market over the last few years, you would see that there's marked improvement. The Nigerian markets, be it equities, bonds, be it the collective investment schemes or the funds, like some call it, are all on the rise, are all growing. It shows that there's a lot of capital formation. If you look at the pension market too, you see that there's a lot of capital formation. But what we're now talking about is making the best use of that capital, making optimal use of that capital. And that's what the DG was talking about there. We want to direct capital into infrastructure development. One of the reasons we are not producing as much as we would like to is because we have not provided the enabling infrastructure. We don't have enough. There's a large gap, a large deficit of infrastructure. And of course, our budget cannot finance this infrastructure. And that's why we are saying that the capital market can fill that gap.
are the risks to sourcing, financing from the capital market for infrastructure development?
Well, the risks, if you ask, would be policy. Presently, I'll give an example. Many of the roads in the country are not tolled because of, public perception of tolls. But what we are saying is, if the private sector can provide this infrastructure, we must have policies in place. We must have structures in place to ensure that that capital that is invested in the infrastructure comes back. So far, that's the big impediment that we have. Before, we used to have the problem of not having enough capital, but I think that if we put everything on ground, if we lay the ground well, we would have enough capital, both from inside the country and from outside. So we think that many of the risks are there, but they are surmountable.
Surmountable. Talking about WACMAC now, that's conference coming up. What are the key topics and issues, that you see, being discussed at the upcoming West Africa Capital Market Conference? That's WACMAC 2023. What are you expecting?
Okay, the West Africa Capital Market Conference is a regional conference. We had the first one in Abidjan in 2019, had one, the 2021 version last year. We couldn't have it in 2021 because of COVID. We had it in Accra, and this is the Nigerian one. It's going to attract investors, capital market players, government officials, the private sector, banks, everyone, to discuss infrastructure provision, infrastructure development in the sub-region. If you visit the countries of the sub-region, you will know that there's this huge infrastructure gap. And that's what we are saying. We are saying that the capital market has what it takes to, help bridge this gap, help fill this gap. And that's what the conference is about. So we have invited very good speakers, people who know what we are talking about from around the region and even outside the region. We've also invited the people whom we want to, convince that this is the way forward. The investors, governments, and everyone to come and let's really talk about this. Because we cannot continue to depend on our respective budgets across the sub-region to fund the infrastructure. We must find a way to provide infrastructure that would help us become more productive. Because a lot of production is lost in poor infrastructure. Just the other day, I was just looking at a picture of farm produce that were spoiled. Trucks of them spoiled because, like they said, the roads from where these things were produced to the markets went bad, and the trucks couldn't get through. And you can imagine the amount of money lost. So we believe that if we can provide this basic infrastructure, rail, power, roads, this basic infrastructure, it will go a long way to, towards improving our respective economies in the sub-region.
And do you think the Nigeria's, capital market, has the capacity, to take on all this kind of funding?
Yes, of course, Ladi. The capital market has the capacity. Like I said before, we formed some amount of capital, but also you can see the pension industry. Presently, the pension industry does not even have enough assets to invest in, assets that can, if you look at returns in that industry, you see that we have negative real returns. We think that if we introduce infrastructure funds, infrastructure securities, we would have more assets, that this capital that we have formed can go into. But also remember that our market is is growing, is big, is attractive. I mean, our equities market has returned in about 30% this year. So our market is attractive. So we are not even only looking at capital from inside our countries, the countries in West Africa, especially Nigeria. We're also looking at capital flowing in from outside. I mean, if you go to Europe and, to North America, you see that it's difficult to make the kinds of returns that we have here. So our market is attractive, and we think we can attract enough capital to fund this infrastructure.
And talking about funding this infrastructure, looking at the macro issues right now, do you think, investors, going forward will still be keen on putting their money their monies, into these projects? Because while we're dealing with inflation, currency devaluation, how much do you think investors can take at this time?
The thing, Ladi, is that investors must put their money somewhere. We really cannot put the money under the pillow or in mattresses at home. I remember that when we fund the infrastructure, we become more productive. We're able to export, and that helps to address our FX challenges. So I think that this is even a solution to the macroeconomic problems we are presently faced with. And I think that investor appetite has not really dropped. Take a look at the equities market. Even the bond markets that haven't done as wonderfully as the equities markets are really, holding up. I mean, each time there's an issue, a government issue, or even a corporate issue, it's also oversubscribed. So there's that investor appetite, even given in spite of the macroeconomic problems that we have, there's still investor appetite. And we are saying that if we can create more products, especially products that offer higher returns, that we would even make the market more attractive and even attract more investors and more money into the market to solve our problems. So we see it's a positive note from our end.
All right, Dr. Oke, we'll be looking forward to the WAC Market Conference coming up. Thank you so much for your perspective and sharing your weekend with us. Thank you.
Thank you, Ladi.
That was Dr. Oke Umeno, Chief Economist, Securities and Exchange Commission in Nigeria. To some other news now, we see some institutional investors from the United States have expressed interest in allocating their capital and explore more direct investment opportunities in the Nigerian capital market. The U.S. Consul General, who led the delegation, made up of 12 executives from leading U.S. pension funds and financial services providers, made this known at the reception in honor of the USAID-sponsored American Institutional Investor Reverse Roadshow.
It is a program that I'm so proud to participate in, to see the work that the U.S. government is doing to promote investment into Nigeria. It's one of the 4 pillars of Prosper Africa, the concept Prosper Africa of promoting bilateral trade and bilateral investment. And I think a lot of people look at the U.S. government's efforts or the efforts of diplomatic missions and they think, well, you're really all about helping American companies, which we do. Of course, we're happy to help American companies to sell their products here, and we're also happy to help Nigerians who want to invest in the United States. But with the concept of Prosper Africa, we're also very focused on promoting Nigerian trade to the United States, and that's part of what the congressional vision was when they created the AGOA, African Growth and Opportunity Act, which allows for duty-free export of goods from Nigeria and across the African continent into the United States, which is a tremendous trade concession and something that we really hope to see Nigeria take advantage of more.
All right, we'll take a break now. When we come back, review the equities market. That's in a moment. Do stay with us. Welcome back. Well, the domestic bourse added to last week's gains as investors' interest in Boer cement and Dangote sugar drove the performance higher. As a result, the all-share index climbed by 1.12% week on week, while the market cap rose close to the 37 trillion naira mark. However, the trading activity level was mixed, as the total volume traded declined by 39.6% week on week, while the total traded value increased by 9.9% week on week. Meanwhile, sectoral performance is broadly positive as industrial goods, consumer goods, insurance, oil and gas indices advanced, while the banking index declined. Thomas Wyatt topped a list of 38 gainers, up by 30.84%. Prestige Assurance led 32.6. Other losers down by 10%, while the trio of Axis Holdings, Nimeth, and Fidelity Bank were the top 3 most actively traded stocks for the week. And join us now for a review of the market is Mr. Andy Saku, equities trader, Capital Care Trust and Securities. Good evening. Great to have you.
Great pleasure, Ladi. Good evening.
Good evening. So Q3 earnings season, I guess that's upon us now. What are you expecting?
Yeah, of course, the market is rife with that expectation in terms of the positivity thereof. The good thing about this expectation is the fact that it's hinged on the performance of the half-year numbers, which we saw quite a number of stocks, showing sterling performances across board, whether in terms of overall profitability or growth. And therefore, I do not expect something completely different from what we saw at half year for a good number of the stocks. So more sterling performance basically is what I'm looking forward to. And we get to know that in not quite long from now.
Exactly. We'll definitely be looking out for those results. But this week, the Central Bank of Nigeria lifted the ban on 43 products from accessing foreign exchange. How do you see this impacting the equities market? Are there stocks or sectors we should be looking at for reaction?
Okay, so first things first, the fact that the central bank took such a decision, I think is a positive. Positive in the sense that, when you institute controls in the market, it has a way of redefining what investors' expectations are. And to that extent, creating a level playing field, to me, is a positive step in there, and of course, one in the right direction. That said, we, however, have to look at the immediate repercussion on what that means. Basically, the fact that this number of items, 43 items, were excluded in accessing foreign exchange simply means that the immediate reaction would be what? Demand will be surging, ahead, and demand for foreign exchange. So to that extent, those companies that are operating in that sector of customers that have been involved in that sector can now access foreign exchange from the official market. That obviously is going to put pressure on the supply side for the central bank. But I think the central bank has told us they are up to the game. They're going to be intervening as the case may be in that market. But that does not also take away the fact that the reality on ground, as far as the reserves of the bank and the ability to meet demand, is a matter of concern. To that extent, for investors who play the capital market, essentially equities, of course, if you have dollar and you're importing dollar into Nigeria, you're going to be buying Nigerian stocks at deeply discounted rates, given the fact that you're going to have some level of valuation that is ordinarily, you couldn't have bought last year if you were investing in the market last year. So for people who have dollar, for example, who are converting to Naira today, they certainly will be having a lot more Naira in their hands, and that makes it quite attractive for them to buy. However, if you were already in the market and there is this constraint in terms of your ability to access foreign exchange, then that has a way of restricting your ability to invest a little more. So plus minus, I do think overall, in the long haul, which the market actually represents, we should be looking forward to increased activity in the capital market.
All right, let's zero in on the industrial goods counter. Now, we know one of the items on that list is cement. How do you see this impacting, the cement producers listed on the exchange?
Usually, I like to approach, this kind of scenario from a holistic perspective. The fact that you restricted the importation of a particular item does not necessarily take away the demand. And therefore, since there will be a need for cement across the country, across sectors, people will continue to buy cement for the use that cement is a.
Hello, Dr. Saki. You might have to unmute. Seems I lost your audio there. I don't know if you can hear me.
Okay, Ladi, I'm back. Thank you.
Fantastic.
Sorry about that interruption.
You can conclude your thought, yeah.
the market is responding to both demand and supply. And therefore, if cement importation is going to be more readily available, it simply means that the people who are interested in buying cement will be able to buy at slightly reduced prices. I saw a proactive step taken already by Boas Cement a few days ago, where they have decided. I've not gone to buy cement, by the way, so I don't know whether that declaration is precise in the market space. But if you go strictly by the declaration by Boas Cement that they are reducing the price of cement, which used to average 5,000 per bag, to 3,000 in that region, that certainly is a booster. What companies actually do need is turnover. And the more you're able to sell, the better for you. So to that extent, I think that they will not be perturbed necessarily just because there's a lift, in the ban of the importation of cement. Rather, there will be more activity, and that is actually what Nigeria needs at the moment. It's not about shrinking or getting people into little boxes. It's about freeing up the environment. It's about allowing the market to play out itself. And then there will be price discovery for any product whatsoever, be it cement, rice, or toothpick.
Toothpick, very interesting one there. We're expecting inflation data next week. How do you see this impacting investor sentiment? That's the data for September.
The numbers have certainly not been one that one can put a tap on the back for anyone. As you do know, inflation has been staggering. Inflation has been indeed, very negatively impacting across households, companies, and of course the entire nation. What we do need is not just those numbers, but those numbers translating into food on the table for every average Nigerian. And that to be able to take place, we must be able to enhance our productive base, ignite it to some levels that everybody is going to have a feel of a change, and not just mouthing the matters of hope, but indeed that hope cascades into individual family lives. What I do think is that individuals, households, and companies must continue to rejig their thoughts and thinking towards enhanced productivity, investing in asset-yielding assets, that income yielding assets, by the way, that will more than compensate for any rise in inflation. And I dare say, not because I'm a participant, the only one such assets so far has been the equities market. You had the gentleman from SEC that talked about the return, the average return in the equity space, which is over 30% as we speak. Not many have been able to match that. And therefore, it's not enough to hold idle cash, whether you call it savings or the fairly relative fixed income assets. You need assets that will give you returns that far exceed inflation. And if you do that, you probably have a good night's rest.
Yeah, investors need a good night rest at this point. All of them, all investors trying to beat inflation going forward. It's great having your perspective, Mr. Andy Saku, equities trader, Capital Care Trust and Securities. Thank you so much for sharing your weekend with us.
Pleasure is always my laddie.
Thank you. All right, let's get a quick outlook for next week. Now we'll see the National Bureau of Statistics release September inflation report. That's for October 16th. To the money market, we'll see overnight rates to trend upwards as 360 billion naira debits for FGN bond auction may offset expected 145.98 billion naira FGN bond coupon inflow. To the bonds market, results of October 2023 FGN bond auction as due 16th of October to influence the sentiments. DMO is to auction about 360 billion naira instruments at the auction, and the DMO is offering instruments worth about 360 billion naira through reopenings of the 14.55% FGN April 2029, 14.70% FGN June 2033, and others. To the T-bills market, lower demand is expected for instruments and expected yields in the NTB secondary market amid tight liquidity. And for the equities market, intermittent profit taking expected to persist amid bargain hunting activities as investors position for the Q3 2023 earnings season. And that's the show this weekend. Thank you so much for watching. I'm Ladi Williams. I'll catch you again next weekend. Bye for now.